All right, everybody, thank you for joining us. We've got a 3 o'clock meeting that we're going to have to get to today, so we're going to have to end this meeting on time, preferably about 2:45 if we can. That gives us about an hour and 45 minutes to hold this. Pat and Lori are in here with their devices, so if you have a question, you're free to chat it into your Skype meeting. Additionally, you can, if you have a long question, one that you want to speak, we can unmute you and allow you to speak instead. So anyways, everybody got the agenda I sent out, hopefully, and actually nothing has changed, which is unique. Usually I had 4 more things between the time I sent it out as a draft and the meeting, but not this time. So the first thing I'd like to go over is we're all new here as far as our year-end processes. Debbie's new, Kelly's new, I'm new in regards to trying to make sure that we transition our provider network from one fiscal year to the next, in addition to things here at DDSN. So there's things we're reviewing and things we're probably going to be doing just a little bit different. Last year Tom Ritter was here. He was our finance director. Chuck Norman was here, and he's no longer here, and Casey Sternenberg was here, and she's no longer here. So as a result, there are some revisions and potentially things we need to ask y'all for that you may end up telling us we already provided that to you once. We sent that to Chuck or something like that. What we have determined is our filing system here is not the greatest, and while we have access to their emails, it's been really hard trying to track through what has and has not been done on some of these projects. The main thing I want to go over with the year-end process is DDSN is part of the state's CAFR, or Comprehensive Annual Financial Report. We are subject to state auditor review, and we have been getting dinged over the head for not closing our books properly, where we have bills that we're paying to providers well after July, and that's a problem. So we're kind of getting in trouble with the state auditor's office doing what we've been doing. So we're going to have to get a lot more structured and strict in regards to our year-end close. Traditionally, you'll get a memo that talks about getting your bills in by July 6th or something like that. We're going to actually extend that date to the end of the month. We've looked at our timelines and everything we've got to do internally and determined that July 31st would work for us. We are going to issue a memo to that effect. Hopefully we'll get that out by May 22nd and get that out to you with details. And we want to provide you a checklist of those items that you need to think about so that we give you something that may prompt you to recognize everything we're talking about in regards to getting things in. Examples may be interpreter services, mods, assistive tech, different logs, ISRs, HASCII waiver billing, things of that nature. All that stuff we intend to provide on a checklist. The next thing is state-funded follow-along. That is a program that 15 of you have that should have been converted to fee-for-service last year, but due to a lot of transition didn't get picked up on and kind of got left behind. But we do intend to flip that this year, just like state-funded community supports. Should have gone right along with that program, but didn't. So what we'll need to do is go ahead and reconcile that program. I think we're having problems, Debbie, with 2019, making sure that we have all that documentation, as well as now 2020 is upon us. So that's an example of where you might say, I've already sent that to you guys. So if we do ask you for that information, if you don't mind providing it to us again and not hitting us over the head and beating us up over it, we're doing the best we can to cobble together the different moving pieces up here for things like that. So we will be reaching out to you all probably here fairly soon on the state funding follow along. And then when we run around contract time, you'll notice that we'll change the contracts for 2021 for that. Summer supports, people are asking about that. I guess everybody knows that we have all of our executive memos back to, I forget, maybe October, November of 2018 are out there on our website. Most of you probably remember Pat's memo on April 26th last year in regards to summer supports. DDSN had lost the IDEA funds that they were traditionally using, which was a supplemental federal funds that we were getting that we were then distributing for summer programs. I guess last year they, after this came up, they realized the funding was not there, but they went ahead and offered it anyways, indicating in that memo that it'd be the last year that we could do that. What we've done is really looked at other alternatives. We have not been able to find another funding source, but what we have landed on is a couple things. One is apparently not everyone recognizes or is aware of your ability to use your own family support respite pot of your non-capitated contracts for summer supports. That has been permitted for a while, so you do have access to that, and welcome you and ask that you consider using those funds to meet your family's needs. And just consider too that needs probably are a bit different this year with the crisis we've been through. You might have families that actually need more, are more interested in summer than before because maybe they're cooped up and had their kids home for months on end. So just do a good job at looking at what the needs are out there. And then additionally, we're in the process of looking at our settlements for family support. Preliminary numbers from 2017 and 2018 indicate that we have a great deal of family support money that providers are holding that hopefully you guys are anticipating us taking and have accrued on your books. And what we're wanting to do is start recovering some of those, and we're going to turn around and make a statewide summer supports pool that Deborah Mann will manage, just like she does an already existing pool that certain providers have access to. With this summer supports pool, it'll be used just for that purpose. We'll have to develop an actual procedure. Lori's in here and can speak to some of that, maybe if folks have questions, but we think we can get this up and running fairly quickly and get some announcements out and develop a process. And basically you would just apply to central office for a family. This isn't a pot of money for you to manage. This is a specific need for a family. And then we would look at that and determine if we can fund that or not. The thing we would recommend or request that everybody, basically assert to us that they've already looked at their existing pot and they don't have sufficient resources internally with their current year contract to pay for these, therefore they need our assistance. And so we hope to roll that out here soon, in addition to several other things we're working on. But just be aware that's out there, and hopefully in the next week or two we can get you something. In the meantime, maybe just put out feelers and make your case managers aware that we are planning on doing that. There really is no decision point here other than can we make it happen quick enough. It's not like we got to take further consideration if we want to do this or not. We do want to do this, so it's just a matter of can we get it in place properly. We'll give y'all a second to ask questions on that one because I figure that one might be one that spurs some questions. All right, hearing none, I'll move on and y'all can let me know if you get a question. 2021 contracts are in the process of being worked on. We cannot issue those until the June 18th commission meeting. Shortly thereafter, we will issue those through DocuSign as we did last year. But we will be working on those. One thing to note is that the fiscal year 14 capitated and non-capitated contracts that are 17, 18 pages long, those have not been issued on an annual basis but have been renewed for several years. That entire packet will be reissued this year with all that language and some new stuff. So we're trying to get it updated with current legal, our legal department's been looking at those. And then there's some other wording that we'll probably end up adding to make sure that we capture everything in our contracts. And that way you'll have a whole new set of fresh contracts with all the language. Okay. You have any comments, Pat? All right, FTE reports. We're planning on sending a memo out on that here soon as well. We've been trying to look at that as well. We're trying not to change everything, but it sounds like we are. The issue we're having is we are not very good here at communicating what we want. and we are not good at communicating back when we don't get what we want. When we look at the FTE reports that we're getting, they are all over the place. We have got all kinds of formats. We've got people giving us names for every single employee. We got folks giving us hourly pay rates, monthly rates, bi-weekly pay rates, annual pay rates. People aren't capturing temporary and permanent properly. We don't have folks capturing maybe vacancies and coverage. So we're going to try to communicate better on what we want. And we're going to give you an Excel file, which I know y'all are familiar with that file, but we will give you a file and we want it back in Excel. And we will then be able to, the issue is we have to aggregate all that data, and it takes a lot of effort to aggregate it, especially when all the data doesn't match. So we have to basically manipulate it to make it useful to us. Debbie, did you have any comments on the FT report you want to make? You have to speak high.
No, just that it's really important that it comes back on the form. That was extremely labor intensive last year. We need this information for determining the rates, and it's utilized throughout that entire process, so that we have to be able to formulate that data in a way that we could utilize it. We'll make sure this year that we not only send the form out with the instructions along with it, and try to give you some guidance as to who would be considered direct or indirect employees. We had case managers as direct and case managers as non-direct and so forth. So try to give you a little bit more guidance this year to where that we're all talking the same language.
Admin costs. Traditionally, we've had providers that, bless you, have HASKI waiver programs. Are familiar with the process to submit requests for administrative costs at year end. That is the same process we're going to follow for state funded community supports as well. Some folks maybe have been asking for that throughout the year. Others, I mean, you shouldn't be, I don't think, unless it's significant, but needs to be a year-end process where you ask for your admin costs. And so we'll get that out. We're going to need to, receive a certain amount of information back to be able to validate the amounts. Again, we got all kinds of crazy varieties and versions of these requests, some with just an amount, with no ability for us to even review where it came from or that it's accurate. So we've got to be able to ensure that when we review these, that we're able to properly allocate administrative costs. So we'll be getting something out on that as well. Some of the providers also waited till their audit was over. We cannot do that. This is an example of those things that we get beat up for. These have to be done before July 31st, or we can't pay them. Even though that we can go back and bill Medicaid potentially, that's not the issue we're running into. We're running into the inability to close our books with any accuracy. We continue, just this past week, we got 2 years worth of billing from one of the providers, and so we need to pay them, but we've lost about 60 grand in ability to bill. Was it 60,000? 60 or 80.
Almost.
We had to eat that. We weren't able to bill Medicaid because the provider didn't get their bills into us timely. So we continue to leak stuff like that, and when we talk about us not having revenue problems and not being able to balance our books and stuff like that, and we're reliant. I'm not pointing the finger at the providers, but we rely on y'all heavily. We don't know what we don't have. So, we continue to have stuff like this happening to us left and right. And we're just trying to, wrench down on this stuff. And really the key is communication in my mind. It's to let y'all know the issues we're having and not just be, if we don't tell you things, you can't fix it. So that's what we're trying to do. All right, the next topic is the Ppp Loans and Grants. Basically, there are a host of concerns that we have in regards to this particular program and those that have received these funds. We've discussed this internally among the executive staff, including Kevin Jacoby and our internal audit department, and we all share similar concerns. We've called Medicaid and talked to them, and they agree with us as well. And as a result, what I've done is I've put a call into Washington, D.C. to talk to the SBA Inspector General's office to discuss some of the specific concerns we have. And I've emailed them, the Inspector General, as well as the primary contact at SBA for clearance and guidance. Once we hear back from them, we'll be able to let the providers know if there is anything that we're needing to deal with. I know one thing that we've got to discuss is proper accounting for the grant and the costs that you have to submit to substantiate that it's a forgivable loan, and therefore becomes a grant. The issue is, to the extent we're paying your salaries for the next 8 weeks after you get funded by this thing, you cannot claim the salaries that we are already paying you for. We cannot have you claim the salaries we pay and then turn around and leave us without those costs to claim. And if we consider that as a revenue and then we just do a cost settlement, we end up pocketing money here that flows through the providers that we have issues with, that shouldn't end up in our pocket. So to the extent you got a PPP loan and you got to turn in costs for the 8 weeks after it's funded, to the extent we pay the salaries, the mortgage, the utilities, or the consumers are paying utilities for room and board, none of those costs can be claimed. So I don't know what folks are going to claim, but hopefully y'all have that figured out. Those costs, we cannot supplant Medicaid dollars either. HHS has got major concerns with this, as well as it relates to proper reporting to them. And so we're going to have to issue some guidance once we get a ruling from HHS and SBA. At that point, we will get something out, maybe even have a meeting for those that receive these monies. This is also potentially an issue with QPLs. We are also exploring that issue. If we have a QPL that is not having revenue loss, these funds are geared towards businesses and providers that have revenue loss from COVID-19 operational issues. To the extent your revenues have not decreased, you already have funding to pay for those costs. So we are also looking at QPL considerations in this area as well. The other issue is we're going to have to issue audit guidance. No matter where we end up on this, your auditors are going to have to do some additional procedures to ensure us that we are properly capturing these costs and revenues in our cost report and in our audits. And we also are going to have to issue cost report preparation guidance, because you can't claim costs with PPP and get a grant and then us claim costs with Medicaid. That's double dipping, even though there are two different parties involved in that. So we may have to issue cost report guidance as well in regards to those loans. Any questions on that?
We have one question that says, in March, at a sit rep suggesting SBA loans.
We were making sure that everybody was aware of all the resources available. We had never advised, we didn't determine the people that asked me if they were eligible, I said no. The people that emailed me about it, I told them they should not apply because I didn't feel like their revenues were impacted, that it wasn't geared towards them. The issue we have is we have a very diverse provider network. We have folks that actually are directly impacted and did lose revenue. This was not a one-size-fit-all solution, and the application process as well as the guidance out there, we never did issue specific guidance for particular providers. So whether you got the loan or not, it's just that if you got the loan, you might have to pay it back. I mean, it's just, so I don't know what you want me to say to that. And there's other SBA programs that are out there besides the PPP.
Yeah.
And actually the PPP was not even issued until the CARES Act, which was in April, I think, or late March. So, our goal was to distribute this information broadly, all providers. It's not our job to determine what you're eligible for and what you're not eligible for, and whether you can get it forgiven or not. I mean, that's an individual provider decision.
I mean, it's your business. We're not going to tell you what to do. We just got to raise the caution when we see the size of some of these loans. It just, right away, we just want to avoid any inadvertent claiming of the same cost twice, because costs that are in our system that are capitated, that are going to services, we need those costs in order to cost settle ours. And if you're using those same costs, you may inadvertently get yourself in a box. So the loans were so big, it gave us pause as to where's that cost going to come from. So we're not telling you not to do it. We're just giving you caution that make sure that it is separate and apart from the capitated payments we have, as well as the costs that are supported by those capitated payments.
The foundation of the program, the very central foundation of it, is to help businesses that lost their ability to generate revenue to pay their employees. And so we don't know how that impacts each individual agency, but you know, that's a decision that was made in regards to actually applying for the loan.
Here's some good questions. Here's some really good questions.
Okay.
So the money that DDSN is expecting to take back from day service, this is not considered a revenue loss.
It is, but the largest payback we have is around $200,000. One provider has a $2.7 million loan. Their payback's $150,000. So, I mean, yes, there may be defensible costs that you can identify. We're not saying there aren't any.
Just be careful.
I'm just trying to tell you that you have to identify costs that we're not already paying for. If you're making money right now, I don't know how you can argue that there are any costs, because you're already profitable, so all your costs are covered. So first you have to be losing money, in my opinion, but I'm not your auditor, so.
Hang on a second. Here's some other good questions. It's coming in fast and furious.
They are.
I can't even keep up. It's moving so fast. We are trying to get a PPP to pay for hazard pay to staff. Why is DDSN trying to prevent us from getting SBO to pay for that? We're not. So
nobody's told you can't do any. We're telling you straight up, to the extent we're paying for payroll costs, you can't double dip. So if you have a way to identify cost and satisfy the bank or whoever you're submitting this paperwork to, then that's between you and them.
we are losing an EI and CM billing.
Okay.
We don't want to get between you and your bank. All we're doing is with the size of the loans, you have to be extremely careful that however you carve it out and what you're asking for, it's just not inadvertently going to drift into our costs that are paying for normal services. So I think it is very doable. It's just a cautionary tale that we don't oversimplify getting these loans, and that as long as everybody's clear, that's fine. It's a cautionary tale we're putting out there.
Well, and Jeff at HHS even indicated that this jeopardizes rate setting studies, and when you got the inability to identify fiscal year 2020 costs, and you're trying to historically review those, you know, you've got this blip, and so there are a host of different issues that this could create if we don't identify it and keep it in the box.
So it's more of the accounting issue. If we are paying pay rates and other healthcare costs that are not covered by DDSN, that qualifies for PPP.
That's your call.
That's your call. And we lost money from our work contracts.
That's your call.
You're trying to get a PPP to pay hazard pay. I already read that one. We will be losing day service monies, so this allows us to keep people employed as intended by the PPP Act. Just be careful in how you measure that. That's all we're asking. We're also losing an EICM. What about the loss in revenue from case management and early intervention?
Yes. So, you know, we can't spend too much more time on this, but if you have individual concerns, email me. I am not your auditor. I am not telling you. It's between you, your bank, and your auditor as to most of this. The issue we have, we're the regulator. We feel it's our job to ensure that we navigate these waters properly and communicate to our provider network. If we don't sit up here and do our job to help, what if we didn't even bring this up? And then everybody's out there doing their own thing and they're tripping across certain other rules that they're not even thinking of or aware of. Finger pointing is going to happen. So, I mean, the point of this is to bring it up, let you know about it, talk to your auditor, talk to your bank, talk to your finance director, whatever you need to do, talk to each other. We are not issuing a ruling right now. We're just trying to give guidance, and we're making you aware of the potential pitfalls. Okay? You got another one?
DDSN is going to ask us for SBA loan documentation. Is that in our contract that we are required to provide DDSN with data on non-DDSN programs?
Now, we can obtain that information from SBA, I'm sure. We don't need to get it from you, I don't think. We got another source for that information.
Can we just throw something out there
Yeah.
also that didn't get said? Yes, you may be losing money in case management and EI, and you may have lost money all year long, and you may be a board that is not really doing very well. This loan is not designated for the losses that happened to you prior to COVID-19. Right. So if you were in a situation that you've lost $300,000 or $400,000 and thinking, oh wow, this is a great money source, it's not designated for that. It's designated for the 3-month or so time periods.
8 weeks.
Yeah, the 8 weeks time period. 8 weeks of losses. That's all.
So I understand this is a sticky situation. I also understand that it probably bothers several people, but sitting here with limited resources, I don't have the resources I used to have to research things. I have to lean on external parties to provide me information. And what I'm trying to do is protect you and make you aware of those issues so that you don't have an I gotcha moment. And so as we determine this information, we'll be releasing guidance on that. The next issue is accounting for day program activities in your residential facilities. I think some misinformation went around. I have told in several, I think this is the 3rd meeting, I've stated that I don't really have a great handle on all the aspects of this day program and have been working on some guidance and have been unable to wrap my head around it completely to issue a memo. One provider asked me a specific question in regards to their program, and it got circulated around the state, and then I got bombarded by a host of providers quoting me. The only thing I can tell you is I don't have a specific guideline yet. My point is, to the extent you have day activities occurring in your residential facilities, that is a day program cost. You need to capture those costs in day program, whether it's 6 hours, 8 hours, 2 hours, 15 minutes. If it's a weekend versus a weekday, I mean, whatever. It's the payroll cost associated with the day program activities. So don't look at it as where did the work transpire. Look at the actual activity that was performed. That's what drives the accounting. So if you have an 8-hour work activity and you want to charge the entire shift to the day program, knock yourself out. The issue is you need to validate that's proper. I mean, if your day program activities are 6 hours, then why are you charging 8 hours? So you just need to be able to defend that. We're not telling you what's right or wrong. It's just you need to think that through. Every provider is unique. And so for us to sit here and give you specifics and make you do it that way is not what we're trying to do. So each agency, just look at that, get a full understanding. I mean, it could even vary by house. I mean, you could have a house where they're doing 6 hours or 3 hours. Maybe they're doing just half-day units. So why would you charge a full 8-hour shift to day program? So just think those through. I've got Ben Orner on the line. I'm going to ask him to talk about desal. First of all, I want to thank everyone for doing the weekly reporting. We do have a few providers that didn't appear to be reporting weekly. Ben and his team reached out to those providers, and I'm going to have him give you an update on that and just comment in general about maintaining the desal on a weekly basis for us. Ben, if you want to comment.
Sure. I think overall we were very pleased. You guys reacted very well, responded very well to our request to key it. The vast majority were keying them on the time frames we asked, which, just to remind everyone, have the previous week's information keyed into desal by the end of the day on the following Monday. We're going to continue to ask you to do that. We are using it and we are looking at it. I know sometimes you might feel we ask you to do things that maybe you wonder if we actually look at it, but I promise you we are pulling these first thing Tuesday morning. So please mark everyone absent or present if they're in the community or if they're in a residential placement, regardless of where they live. Mark them as present or absent. You don't have to actually submit or approve it, whatever the word is, just key it in there as present or absent for each of the day and the afternoon units so that we can run that reporting.
And then Ben, if you want to go ahead and tackle the weekend desal reporting question.
Sure. We did get lots of questions about whether that could be done on weekends, and there's nothing in standards or guidelines or manuals that says it can't be done on the weekends, but you do have to remember that it has to be within the authorized amount. So if they're authorized for 10 units per week, you cannot exceed that 10 units per week. The weekend option should be a flexibility option, should also be, like everything else, at the choice of the individual that is being served. So we're not forcing anyone into any sort of activity in order to be able to bill. It's just strictly something that is allowed for flexibility purposes. However, you guys can use that, but you can key that into desal if you do it. You just have to override the current setting. It's defaulted to absent for the weekend since the vast majority of people are absent. That way you don't have to key it, so it defaults to absent, but you can override that and change it to present if you are offering the service.
Is there any plan change or anything like that, Ben, that they need to do?
No, there is a requirement that the locations post their operating hours. I imagine there'd be some flexibility with this since the operating facilities are so varied, but something I believe was sent out regarding that, but it should just post your hours that you're actually offering services. So if you are offering services on the weekend, in theory, that should be open to anyone who wants to have services on the weekend. But that is, again, in a sort of different frame of reference from how we're currently operating. But it wouldn't be a bad idea just to post those in the houses just to cover the bases. But if case management plans don't need to change, then the actual day program plans only need change if objectives are changing. We do have the COVID ISP out in their app that we've sent information on. If you wanted to use that in this time, it's very flexible and would allow you to adapt their objectives based on the current situations.
Okay. And did you mention the authorization already? Did I blank out when you said anything about that?
Did it just
needs to stay within.
Right. Yep.
Okay.
Match authorization. Susan John's asking if now the consumers are home 7 days, can we ask for additional units for Saturday and Sunday so we could ask for 13 units instead of 10 per week? In theory, it could be asked for. There is no limit. You'd really have to justify why. I think in talking with some of the Lynn and Susan and then looking at some of the best practices around the country, that much day programming kind of can wear out somebody, just like you wouldn't want to go to work 7 days a week. I can't imagine that they necessarily would like to do that, but that's not to say it can't be done. It just needs to be done very carefully with consideration for the individuals who are being served. And again, you'd have to have the authorization changed first.
Okay. All right. We're down to item 8, the settlements. Debbie and I have been banging our heads against the wall trying to get these settlements done, and we are getting nowhere. We're like swimming upstream and losing momentum every time. But what I've kind of figured out is I need to just tease these apart. Again, a lot of this has to do with inconsistency in audit reporting and our inability to locate things in audit reports, and the diversity in practice related to a host of different, even the care and maintenance, how it's recorded, how family support funds were handled when they were carryover years, whether it was deferred or not, and unearned revenue, whether it was all taken in revenue and reported as a profit. It's just, we're having a hard time. So anyways, what I've kind of realized is I got to get this boat moving. Y'all got to get, some of these things cleared up on your books as well. We want to settle family support for 17, 18, and 19. As I stated, when we settle 17 and 18, when we settle family support, we plan on taking some of that money or most of it and throwing it into summer support. So that money is going to be recirculated into the system. And we don't have the details of anything on 19, we don't think. So that might be an example of where we reach out to you and get information that you may have already submitted. Again, the primary concern we're having is how this, you have like the ability to roll over for 2 more months, I guess through August or something. And again, our audit reports cut off June 30. There is no reporting to split the year into different pieces, not consistently anyway. So we may need additional information. When we do settle those, though, we're going to factor in your cash situation. We don't want to hurt providers. We will work with you on timing as well as advancing funds or loaning funds. This will be looked at when we look at the day program situation. We're just trying to settle some things and get things done because they're just sitting out there in limbo for years on years. And it's just not good. And so we need to get our system and our routine back. So those were the ones we wanted to start with. And then also care and maintenance. We're trying to work on that. That's for ICFIDs. Got an issue there too, I think, because it appears just in looking at some of our analysis that maybe we have some ICF conversions that are occurring mid-year. And since as a part of the conversion, the provider's not immediately made rep payee, that we continue to be rep payee for a period of months. And we continue to pay that through our regional centers, and we're picking it up as care and maintenance paid to you, when in fact it's room and board. It's money that you're turning around and collecting as room and board. So we can't settle that with you. That's your money, not ours to be recouped. So I'm working with Deborah Leopard to identify facility conversions that occurred in the last 3 years and make sure that we have a proper BABS care and maintenance report cutoff so that we're not pulling funds from you from a house that converted. So I guess when those settlements come out, you need to look at them really, really close and realize that there could be errors in it. We're doing the best we can to do it properly, but we ask that you do challenge us and question what we're doing, because there are a host of different things that can go wrong, and there's been much turnover here. So we want to make sure that we're doing that properly. Those numbers are not very big. And some of those, we owe providers money. So you're out there wondering, we're going to send you your check. Some of these folks, one of the boards preliminarily will owe them about 50 grand that's sitting out there for care and maintenance settlements. So it's a plus minus type thing that doesn't add up to a whole bunch of money collectively for the state. Yes, sir.
We got a question. So when they convert, doesn't the funding band change?
Yes, the issue is, here's the problem. When we do the ICFID care and maintenance computation, we run a report out of the regional centers accounting systems, out of everything we've paid your board out of the regional centers. Then we compare it to what's in the contract. And so Deborah Leopard's adjusting care and maintenance every single contract. So if that facility converts, she will change the client fees and remove whatever period of time is remaining so that we don't continue to expect you to settle with us on those. The problem is we got apples and oranges. We've got the contract amount that Deborah has that's very, very accurate, that's reliable, that we can tie to. The problem is the reports we're running from regional centers include funds potentially that we paid you after the date of conversion that are not care and maintenance funds. So we've got to ensure, just as an example, let's say you had an ICFID that converted to a CRCF January 18th. Well, if we sent you your care and maintenance in February, March, and April, right now our report would be picking that up as care and maintenance that we paid you, and we would ask for that money back because it's going to exceed what we expected you to get. That's not our money though, that's your money, because effective January 18th, we shouldn't have been paying you anymore. But we had to because we were still rep payee and we were receiving the benefits. So we got to tease that apart. I don't think there's a ton of facility conversions, but there are some. And so we're going to need your help because you got the records. You know, we're looking at it as 39 boards, 38, and you're looking at it as one board. So we're going to need you to question us and challenge what we've done. We want to get it right. We don't want to take money. We don't want to underpay you if we owe you more. You know, if you got a different number, then we'll balance our books against what you have. But again, when these things are done, we will communicate with you, make sure it's not going to cause a hardship for you. If it does, then we will work with you. We are not wanting to put you in a pinch. That is not our goal. We just got to clean our books up collectively. One piece of good news, I guess, there got to be something in here that's like yay. Case management and early intervention billing process is extremely tedious unnecessarily. We feel like Davey and I have been reviewing our existing process, and we think we can do it a lot more efficiently and not require all the printing and signing and scanning and sending this page and this full report. And we're looking at basically running some reports in-house and setting up a process for you to approve and authorize that you've reviewed the units. And we will begin remitting payment without you having to do all that craziness of scanning things to RBC. We hope to do that in the next month or two. We've got a lot that we're working on. Did you have a comment on that? Do you think that's too aggressive?
Well, a little
you know,
bit.
it's a huge
How
time
about
saving
July?
for us as well.
Yeah.
Right. If we can implement this at the turn of the year, that'd be great. But we recognize it's a huge lift for y'all. It's really kind of silly, all the process we go through. And we feel like we can streamline that. There are other things we're looking at trying to streamline, but I'm not willing to throw those out yet because they're just in their infancy as far as us looking at those opportunities. So once we get closer and we know exactly what we're talking about, we'll communicate that with you. But I do foresee that occurring sooner than later, and it should save you and your staff a lot of time. You know, the main issue is you're still going to need to generate some type of report for your accounting department so that they can recognize revenue and book a receivable and make sure that y'all collect the funds that are due. And we can't change HHS's process. We don't own that process at all. So I'm not even familiar with what you have to do with them, but you know, we can't change anything they do. Item 10, the OPEB and GASB 68. We told y'all several months ago that we determined those were not allowable Medicaid costs, so we've got a real issue there in relation to reporting our cost of Medicaid right now in our existing cost reports. All those costs are all muddied up in the cost reports, and there's no way to really tease them apart because they're not even reported individually on the audits. They're rolled up into health insurance and retirement expense with no visibility on a program level. We did ask that that be done differently last year. Not everyone did that. Most folks did, but not everyone. Still got a lot of folks reporting it the old way. The issue is we really have to get this identified. This is not allowable cost. Medicaid has said it to me and Pat several occasions. We got to be able to pull that out. So all we can do right now is pull it out in total, which is almost, about $18 million, I think I calculated for 17 statewide. So when we report our costs, that's $18 million worth of costs that we can't be turning in. So the issue is we need to issue some revised guidance for cost reporting Y'all are going to have to make sure that this is adjusted out of your cost reports when you do your cost report adjustments. Additionally, if you're using your cost allocations that you use for your financial statements, those cost allocations include OPEB and GASB 68 to properly report on GAAP. And so those have to stay in regards to financial statement reporting, but when you come over to Medicaid costs, you're going to have to tease that out of your expenses that you're using for your allocation, both to determine the allocation and the amount of cost that you can allocate out of each pool. So in other words, when you determine your admin allocation, admin can't include those costs, you can't allocate it. Also, the cost that you're using to determine the allocation, how much percentage goes to each program, those expenses also cannot include those costs because those are distorting the allowable cost for Medicaid. It's got to be a Medicaid cost allocation. This sounds really, really like a pain, and it is, but back in the old days, pre-GASB 34, we had to do all this stuff because your audit, you would be allocating costs in your audit, and back in those days, you didn't record depreciation on your audit. You recorded asset acquisitions. You didn't record just interest, you recorded principal on your notes. You didn't allocate, you weren't allowed to record accrued compensated absences in your audit. You had to record them on your allocated cost for your cost report though. So this is something that we used to have to do, and the thing is it's no fun, but it's normal. We've kind of been spoiled. Not having to do these things. So we realize we're going to probably have to do some training with the auditor or whoever's preparing cost reports to ensure that that's being done properly. Again, there's nothing I can do about that. We got to be able to identify these costs. We got to be able to exclude them in what we turn in. Got questions?
Questions?
Man, I got lots of broccoli, don't I, today?
Yeah.
The COVID accounting considerations, back to the PPP loan. By June 30th, you're going to have to make a decision whether it's a grant or a loan based on your anticipated forgiveness. You're going to have to determine how much revenue needs to be recognized versus how much remains on your books as a loan. You're going to have to determine where to recognize your revenue. You know, if we put it in our capitated programs, we got to be able to identify that. Unless you're going to separately account for your payroll costs and put it in a separate department. So there's some things to be thinking about. Also, tax credits. If you're taking tax credits for employee retention, those, while they are an offset to your Social Security expense that you're reporting on your 941s and your payroll deposits, that is not the proper reporting for GAAP. Social Security expense should be Social Security expense, and then any credit you get would be a revenue. So we're going to have to issue a revised accounting guide like we did last year, because if you look at our directive right now, we have nothing in our report about how to report PPP loans or grants or how to report these tax credits. But these should not be an offset to your Social Security expense. They should be a revenue. Also, you're allowed to defer tax payments for Social Security, the 6.2%. If you are doing that deferral, it is key to ensure that your proper liability is recorded at year end. You owe that 6.2 whether it's payable or not. So there is a real potential that folks aren't reporting that correctly. And hopefully I can get some guidance out on that too. It's kind of confusing. And then MDA revisions, you need to work on your management discussion and analysis probably sooner than later on that as well. There's a great deal that we would expect you to put in there in regards to this situation and how it's going to affect your operations. If you look at GASB, they're very specific on what they expect in the MDAs, and they have issued that emergency toolkit that I've shared with y'all. And there are things in there that they talk about. They expect MDAs to be revised for all these uncertainties and changes in how you're going to handle things going forward. We do have the Galasso training session on May 7th. That's this Thursday. We've sent out the link to that. It's going to be a Zoom session. We hope folks will attend that. Anyone can attend that wants to attend. If you want your board members to attend, executive directors, whomever, I'm not going to guarantee they'll enjoy themselves, but they're free to attend. The only people that have to pay to attend are the auditors, and that is very, very cheap continuing ed for our auditors, so they shouldn't have a problem paying the $50 fee that we're asking them to pay. We also are going to have to refund some money. A lot of y'all have paid to attend because we planning on having it here and having lunch. And so we will go through and refund providers that paid the $10 and get that done hopefully here soon as well. Nothing is easy. Auditor training, second session is May 12th. That's next week. I think the first session went well. It was a lot of information packed into a short period of time. Probably not nearly 2 hours is probably not enough actually, but we'll wait and see what attendees have to say about it because we're going to do a survey for those attending. You're free to attend that even if you have not signed up. The only issue is I need to make sure I get you the Skype link. There really is not the only reason I have you registering is so I know to send you the link to attend it. So if you want to attend that and you're like, I haven't signed up, it's too late. It's not too late. Just go ahead and do that. There is no cost for that for your auditors, and they do get CPE for free for that if they attend, and they can offer that to whomever in their firm. It's not limited to one person in their firm. Quarterly basic training is coming up on the 28th. That's the one we do where it's the same exact topics every single quarter. It's 9 to 12 training, I think that's the timeline. You know, we hit a lot of stuff really quickly, and we've got, I don't want to say 30 or 40 folks signed up for that right now. Again, that's going to have to be done virtually, most likely. I don't anticipate by the 28th. Or you think we're going to be meeting up here at all by then? Any idea in your crystal ball?
50-50.
Okay, so, you know, it may have to be virtual, but we will make sure that folks get that announcement as well. We do have an issue with our survey tool. I don't know what's going on with Mbo survey. For some reason it's broken, and I don't know what's happened. I've emailed them several weeks ago. I don't know if they're out of business or what their deal is, but I've had to go to a different tool. So if you're trying to sign up and you can't, just email me and let me know that you want to attend. I've got 3 or 4 of you that have done that said you're trying to sign up and can't. So just let me know and we'll get you signed up.
A quick question.
We're in the question and answer session.
Is the May 12th auditor training the same content from last Thursday's auditor training?
It is.
It is, okay.
We will probably end up, we might have to even offer another one. The goal is, well, a couple goals in doing it more than once. One is the repetition. So that if somebody hears the first one, they're like, you know, that was a lot of information. I sure could benefit from hearing it again. They have that opportunity. The other issue is to provide enough opportunity. Not everybody's going to be available on the date that we offer it, so we have to offer it multiple times. The other issue I'm having is it may be that the 30th and 12th even didn't work for a lot of folks. So I might actually throw another one out there, maybe in June, early June. By then, we'll have more guidance we can issue as well in regards to this PPP and other accounting issues that we're now working on. So we might throw out an actual auditor training as well around June, 1st of June. But yes, it's a repeat. We do plan on recording this training. I had an IT glitch that we weren't able to record the one last week. The intent is to record this week. And to publish that and to share the handouts freely. The Galasso training session, same thing. She's recording that for us. We intend to share the handouts as well as that video with anyone that wants to see it within our network.
Just a few comments that the auditor training, you know, was too fast and needed a little more time. And the row-up part seemed to be okay. Just, it was just a lot of process in 2 hours.
Well, I guess the reason I got into it Well, I had a lot of pushback to begin with. Everybody that commented publicly on the directive disagreed with the need for the training to begin with. So I was out on a limb even pushing to still do it. So then I was left trying to guess, how to maintain that and not take too many people's time. But then as I got into the training and started developing it, I realized there was a lot of content to develop, and trying to identify who could have been that people are getting the content and going, I know all this. I mean, why am I attending this? So it really is the kitchen sink as far as people maybe attending that. Folks that are like, yeah, I know all that already, versus others that are hearing it for the first time. So it's a real hard balance to strike. Maybe we'll do a basic auditor training next year, an advanced auditor training or something.
No more questions.
I'm sorry there's so much negativity news. I mean, I'm not trying to be that. I got to get this stuff out there, and we got to communicate, because, that's my goal, is to inform people and make people aware of things as I hear them and as I learn them. So I apologize for all the broccoli and not much candy at all. I will ask, if there are things that you think we do that could be streamlined that you just do not understand, please email Debbie about it. I know day program is one of the things we're looking at. I told you I couldn't really get into areas, but we are looking at the day program where we have financial managers being billed by a third party, and this chase that happens. Some of that will change with fee for service probably if we go that route, but then others may not. So if you do have things that you think are stupid that we do, let us know. We're trying to address those things, and we may not be aware of all those things that you are. All right. Well, if y'all will be on the lookout for a variety of memos, some of them are going to come from Debbie. In regards to some of the year-end processes and so forth. And again, please be patient with us as we pivot to new staff. We've lost a lot of institutional knowledge, and we're trying to ramp up, and get all that back in place.
We have Susan John out there wrote a question. Susan, are you going to add to that, or?
She's probably taking
Okay.
That's what I was thinking.
I'll stand by.
Put questions as you can type.
But you gotta hold on for a minute until we get it out there.
Unmute. Can you unmute Susan John? Do you know how to do that?
Yes. Find her on the list.
Ben, can you unmute Susan John?
Yeah, I'll get it. I've got it. Hold on.
I'm
Can you hear me on the phone?
Yep.
Yep.
Okay. As we're all preparing for end of year, I know you all have a special called meeting on Friday as it relates to day services and monies that will probably be taken back from the provider network. I'm just questioning, have those numbers been sent out prematurely to providers so that we have a concept of what we might be expecting from that? I recognize that the commission has to make a determination, but our best case scenario and our worst case scenario?
Well, that's open for discussion. I mean, the issue I have, Susan, is kind of like me putting the SBA comment in the sit rep and it blowing up in my face just because I threw that out there. Invariably, I'm going to put every disclaimer there is as to the rate, and it's going to come back and be like, well, how did it go from 130,000 to 180,000? What's your take on that?
I mean,
the issue is we can't share it statewide where everybody sees everybody's numbers, but I have been sharing it
that's
individual.
not what I'm asking. I'm just wondering, as each individual provider, have we been given a range or a possibility to be able to look at that from our book perspective and say, how are we going to manage that?
For those that have emailed me, I have shared with them a range, and I know Nancy has asked me, and y'all have your number, and you're probably asking for the benefit of others on this call. I'm pretty sure I've shared Ori's numbers with Ori. But yes, if you want to email me, I'll be glad to give you the number. The issue you got to realize is that things are, I mean, it can change. Go ahead.
At the margin, yeah. If you haven't seen it, Susan, we put out on the commissioner's webpage the audio and the handout from the last meeting. So it kind of details it all. I think in there you might be able to, I can't give you the exact number, but we were kind of ballparking what that number would be and how it would impact your payments. I think it's best for afterwards, just call Chris. He'll tell you what the calculation is at the new 50% number. Is that right?
And with the utilization.
And with the utilization. Just to give you a ballpark of the impact for those payments.
Yeah, and I did it originally. The calculation I had done was based on, we identified how much day program money was in each band and rolled back all the revenue, but there was a very good comment, and I think Linda Tyler for Berkeley was the one that offered it up, if I understand correctly, who made the suggestion. But you know, that was a very, very valid point that the mix of utilization out there is so different. So the numbers we're using now are not my original numbers, they're the utilization numbers. The total's the same, but the amount that it hits each provider has changed. And I think it's way more fair, honestly. Because when you think about it, you know, if you're not utilizing day program money at the same rate that your neighbor is, you know, why am I taking your money that you're using for at-home services when you're not using the day program as much? So there was a built-in flaw in the method I was using, even though it was justifiable and made sense. It wasn't the best method.
And when we had that original meeting and we talked about a 70-30 split, that was that assumption based on what you thought the FMAP numbers were going to be at that time, or was it based on just the calculation of how you calculated originally versus how you're calculating it now?
We still don't know the true legitimate FMAP number. We still think we have a range. The issue is we feel much better with the range being shared. It aligns better with the numbers we were expecting, but there's still some wiggle room in it. The number we got prior to that initial meeting with the 70-30, that FMAP number would not have even made us whole with what we were looking at doing. We were going to have to figure out something else as well on top of that to make sure we were actually going to be able to make it through year end. So once we got a better number and something we felt better about, that's when we doubled back and made it 50-50.
We definitely had more confidence of making it to June 30th. So I wouldn't say it was dependent on that. It was more dependent on the fact that the first number we gave you was, I thought, very, it could put us in financial harm's way when we did it, but that was the information we had at the time. We feel better now, and I think that's where the extra 20% came from. It's truly based on what we consider from May 1st to the end of the year, you do have replacement services that you will need to provide consumers. So we have to make sure the band has sufficient resources to cover that, and that's the foundation of the 50%.
Thank you.
You're welcome. Anyone else? All right. Well, I guess we'll adjourn the meeting. Speak up quickly if you do have a question. We'll give you just a few more seconds, but otherwise we'll end the meeting. I appreciate everybody, and you know, if you need technical assistance, reach out to us up here. We know this is a lot of stuff to digest. If you have day program type questions, you know, Lori and Ben are available, and Lynn, Sig. If you have accounting type questions or settlement type questions, reach out to Debbie or I. We'll do everything we can, you know, to help you out. All right.
Thanks, everybody.
You can end us.
Thank you.
Thank you.